to Off the Record, talking real estate with Joe and Makayla. If you're interested in the Portland, Oregon real estate market and want the unvarnished inside scoop, you've come to the right place. Thanks for giving us a listen. Okay, welcome everyone. Thanks for joining us. And today we have a fantastic show for you. And I'm so excited to introduce my good friend, Mr. Todd Gydesen from Vantage Mortgage Group. How are you, Todd?
I'm doing great. Thanks for having me.
Yeah, absolutely. Always a pleasure. And then as always, the better half of this show, Makayla Mast. Hi, Makayla.
Hi. How are you?
How are you?
Oh, I'm doing good, except I'm in a COVID hunker down, which is kind of a bummer, but I'm happy that Zoom exists and we can still do this.
Well, all the best for a quick recovery for everyone in your household. Let's jump into this. There's been so much going on in the world of real estate recently, and also the Federal Reserve making their statement about dropping the Fed rate down a half point. People are all a Twitter about what is going on, what this means, and all sorts of good stuff. So we thought we would do a show today with our resident expert on that topic, Mr. Gydesen here, and just kind of figure out what it means for everyone. And hopefully you guys can get some good information from this. As always, we will have in our show notes anything that we talk about here that's a visual or whatever. You can always go to liveportland.com, livportland.com, and in the upper right-hand side, click on blog, or podcast. You'll be able to see what we're talking about here. So I got to ask, Todd, what's your take on the half-point drop? Were you expecting that? Was that a surprise?
I think a lot of people are expecting somewhere between a quarter and a half point drop from the Fed. And I really believe that the mortgage rates had already had that built in. I think it would have been a huge disappointment if it didn't come. So, I mean, we've seen a couple of people come out. One thing from the NAR chief economist explaining that, listen, the better improvement on mortgage rates has already happened, and they don't expect a lot of great improvement going forward until we see some more economic markers like inflation data, job loss data, those type of things moving forward. So, yesterday my phone's blowing up with people that we're currently in contract with, and we have float down opportunities, which means you're locked at this rate, but a better rate comes up, you can get it. Just in a nutshell, it's a little more complicated than that. But the point is that everybody's like, does that mean I get a half point better? And the answer is no. No, the answer is that the Fed rate and mortgage rates are very different, and that mortgage rates have already been moving, and the Fed rate just moved. So the old adage of mortgage rates move first, Fed rates move second has been true so far. Of course, we're only 24 hours into this.
It always amazes me how people think that the two are tied at the hip. And it's a corollary thing. Like, okay, well, that must mean we're getting a half point drop in mortgage rates. And it's like, well, that's not exactly how it works.
I know it.
And Lord love them, right? They want it. They're in the middle of the transaction. Wouldn't you want
We all want it.
Yeah. It's kind of funny. People have been sitting and waiting for this big meeting. And we've been trying to tell them for weeks now, come on, now's the good time. They've dropped, but they just haven't believed us. So here we are. They're still better than they were. So Todd, where do you think interest rates need to be in order for a healthier real estate market here in Portland?
I think that, with rates, you're in the low sixes, pretty close to 6 for, just a standard second-time buyer, excellent credit, single-family, primary residence purchase, 20% down. You're in that low 6 range, really close to 6. There's some first-time buyer programs that are down. If you're first-time home buyer and your income is under certain thresholds, you can be in the mid-5s right now. So I think there's a lot of good news out there as far as interest rates compared to where we've been. What really I think moves the needle for people is going to be what's the monthly payment, right? And can they get that? So I think we'll be talking about that a little bit more later. But that's what moves the needle is, where does it get a payment into your comfort zone for what's available that you want to live in?
Yeah. And I've been talking to so many more buyers who are more interested in that payment amount versus what they can actually qualify. And it's so good to see because, in years past it was, I can qualify. I'm pre-approved up to 700,000. And it's like, okay, well, what's your payment going to be at that? I don't remember. It was pretty good though. And
Yeah,
it's
yeah,
like,
right.
maybe we should worry about the payment first. So I think the public's starting to get on board with, okay, how much am I going to be paying a month on this? And is that my comfort level? So that's good to see. So I have to ask, with the recent drop in interest rates, how much more does this allow people? I mean, what is a drop from where we were at 7.5 or so down to 6%? I mean, that's pretty significant, right? I mean, how much impact does that have on a payment?
Well, you got to think that's about, I mean, just looking at $100,000 mortgage, which there aren't any out there, but if there were, that's 2,000 a year, well, 1,500 to 2,000 a year per 100,000. So, at a $500,000 mortgage, what is that? 5 times 1,000, $5,000 a year, $450 a month, lower in payment, just going 1 point better. And remember, at 2 years ago at this point, we were in the eights, or high sevens, low eights. So it's good news. It's more affordable. The question starts to becoming, again, is it affordable enough?
Right. And I think there's a lot of people out there right now that are in kind of a wait and see mode, even though they might be in more of a comfort level. There's all those external factors, the election and this and that. And, there's actually a lot of job concern as well, especially on the west side of Portland, out in the tech district with Intel and Nike and some places like that. If you don't have a job, if you're not comfortable with your job, it doesn't matter what the mortgage payment is. That's a hard thing to get over if you don't have job security. So hopefully the rates keep dropping and we can see more of a savings with that. But yeah, interesting times.
I think we talk about this a lot on our podcast, but it never hurts to say it again. Todd has a great website, Vantage Mortgage Group, and they have a live rate calculator on there. So you can go in there and punch in numbers for your own scenario and just see what it's going to look like for that monthly payment. Because I know a lot of people surf on Zillow, and Zillow has those built-in calculators, which are great, but they don't update their rates very often. So a lot of times,
and they don't allow you to plug in your personal information,
right,
not, personal, but your situation as it regards to price and down payment and this and that and the other. So I love that website, Todd. You guys have done a fantastic job with that. We'll post that on we'll post a link to that in our show notes so that people can check that out.
Yeah, it's there for use. And again, we don't bite. So if you got some questions while you're on there, if you need any help, so I'm not going to hound you. Just
He doesn't
get in touch
bite very
with us.
hard.
We want to make sure that you digest that information properly and that it's not taken wrong. So, it's very important to get accurate and good information for your situation.
Yeah.
That's a great.
Cool.
So I'm excited to chat about this one because this is a conversation we're having a lot, but it's fun to bring you in the loop too, Todd. So we're seeing a lot of move-up buyers right now, and people are so concerned about, being able to sell their home and move directly into a purchase without having to do what we call a double move. How can we tackle that on the lending side of things to make that a smooth transition for people?
So, buying prior to selling is what I'm thinking we're talking about here. And so there's a whole bunch of ways to do it. And some of them are straightforward, which is what's called a cross collateral loan. One of our lenders, we're a mortgage broker. We've got 40 different lenders in all their programs. And it's kind of a great situation for us to be able to offer all of these things rather than being tethered to one set. We've got them all. And one of the lenders has a cross collateral loan, which says, hey, you've got a bunch of equity in this property. How about we leverage that so that you can buy this new property, and then when that other property closes, we'll pay the new loan down and knock your mortgage payment down. The great news on that program is you don't have to qualify for all the payments. You just got to qualify for the new payment on the new house once the dust settles. So we project that out, and that's oftentimes the biggest piece is I can afford the new payment once all the dust settles, but I can't afford all three of these payments.
How long did they give you to sell that first property?
Right now, there's not a limit on it. There's not a market time limit. There are some other programs that do have market time limits. They're buy before you sell types of programs with 2 or 3 lenders with those. But now we're getting into a situation where the lender is going to provide you with basically the equity for the new purchase, and they're going to guarantee the sale of your existing house. But if your existing house isn't sold in 4 or 6 months, depending on the program you use, they buy it from you at a reduced rate. And that puts a little bit more stress. And then also they charge 2.25% to 2.5% of the sale amount for that type of stuff. So the key thing in all of these is, what are the fees? What's the what if? What's the but piece to this, right? So, but there's a bunch of different ways to get it done. And if you have the income that allows multiple payments, we can get a home equity line of credit and then a new mortgage, and then again pay things off as the house sells. There's just a whole bunch of ways to go. And I think understanding your situation a little deeper and knowing all the options is going to be what's key for you.
Yeah. From a real estate broker side, there are so many different strategies you can use as far as, possession and different things to make that all work seamlessly. And this is one of those scenarios, like most, and we talk about this all the time, but having the conversation as early as possible with your lender, with your real estate broker, and just understanding what the different options are and getting a strategy that works for you is what's important, because having that plan with something like this is critical. But also, until you have the conversation with someone like Todd or Makayla, you're just not gonna know what you can or can't do, right? So that's a big one. I want to jump to the future, Todd. What do you think the future holds for the housing market from the lending side in the next 6 to 12 months? Everyone asks us, and I'm sure they ask you all the time, well, what do you see in the next year, or so? And it's always hard to put a finger on it, and it changes all the time. But I'm just curious what your take is right now.
My take is, I think that as the economy falters, and it's going to a little bit here, and we're going to see some job loss. We're already seeing signs of that and seeing some action on that. Mm-hmm. Bad news for the economy is good for interest rates. So the question is when does that tipping point reach where the good news in interest rates is outweighing the bad news in the economy and quelling those fears you talked about earlier, and put things into an affordability zone where people can act, right? So there's a bunch of people right now in houses that refinanced or bought their house 3-4 years ago during the COVID scenario. And those people are in 2.5%, 3.5% interest rates, and they're not going anywhere. I mean, it doesn't make sense, right? And so why go pay double for a house just because you want to lose a bedroom or you want to get but all these people are still getting married, they're still having kids, they're still having divorces, they're still
right. Life happens.
All these things are still happening. So I gotta think that there's some built up, pent up demand out there that we just honestly haven't been seeing for the last year and a half, 2 years. So it's not like people quit having babies, right?
No.
So the thought is that in my mind is that at some point the scale tips on affordability to the point where it's back in play and it's back in vogue to have the conversation.
Right. And I, like I said a few seconds ago, having the conversation costs you nothing, and it gains you all sorts of knowledge about what you can and can't do, and what your options are and that type of thing. And it pays to be able to know exactly what you can do. And I don't know if you see this as well, Todd, but it's so funny. A lot of times when we have these conversations with people that are like, oh, well, we're not thinking about doing anything for a year or so, or this or that. We just want to figure out what it looks like right now. You have the conversation, you lay out the options, and they're like, oh, so we could do something right now, or we can do something if we do X, Y, Z. And just that realization is, always kind of a chuckle for me. It's like, yeah, good job on you for having the conversation, right?
Yeah, I think the biggest thing that I keep coming back to is I don't know that it's too early to plan. And it's like planning. Look at the purchase you're making, and look at the magnitude of it. It's $500,000 minimum probably in this area. So planning for that is not bad, even if it's a year or two out. Knowing your options and knowing your sticking points and knowing your target savings and your target payment and the key metrics that are going to get you where you're comfortable. There's nothing embarrassing about talking about that in advance and planning for it.
Couldn't agree more. So Todd, what advice do you have for first-time home buyers right now?
It's exactly that. It's planning. What are you trying to do? Where are you trying to be? What are you comfortable with money out of pocket? What are you comfortable with monthly? And what does that reverse into for you? Right? What's available in the market? And as Joe just said a minute ago, I get into these conversations with people. They have a little bit of money saved. They've got great income and great jobs going on, or growth in their income and their jobs, that putting them in a comfortable situation. And now we go backwards and we say, hey, that translates to a $450,000 house. And Joe and Makayla can say, hey, this is what's available in the range you're looking for out there. And we still haven't done anything. We still haven't spent any money. We still haven't pulled credit. We still haven't anything. All we've done is had a conversation and said, this is a reality that could happen for you, or we're not quite there yet. Worst case scenario, there's nothing out there at that price, and we've got to wait for things a little bit. So,
Right. Good stuff. Anything else you want to add, Todd? Is there any hot news or anything that we missed that you'd like to include on this?
I want to talk on affordability for just a minute. Here's where things are different than 4 or 5 years ago. There's a lot of down payment assistance programs out there. So if your hurdle out there right now is that you don't have money for down payment, you've got the income, you're really confident in that, you've got good credit, you can afford a house that's available in the area, but you just don't have the down payment, we need to talk, because there's options out there. Reading something from Rob Chrisman the other day, who is an industry pundit and somebody that provides advice and a talking head, for lack of a better term. But his point is there's over 2,000 down payment assistance programs in the United States today. Some of them are local and specific, and other ones are more general and national. So knowing what those are and having access and being able to tap into that to get that down payment is going to overcome a lot of the hurdles that some people have these days. So that's number one for affordability. Number two is knowing area median income for your area and where you sit in that scale. Because if you're below 80% of it, there's reduced interest rates for you if you're a first-time home buyer. So there's some great things out there right now that are really going to help people who just have, hey, listen, we need a better interest rate, a lower payment, or we need down payment assistance. Those things are actually available.
That's a great point. And we actually have the data that we can put on in our show notes for what the median income is for the main zip codes around Portland Metro, Hillsborough, Oregon City, Canby, all the different places in town here. So we'll post that for you. Head to the notes, check it out. And like Todd said, who knows where you stand with that, but there is a ton of help. And the feeling I get is, especially from the federal government, is that the economists know that first-time home buyers, affordable housing drives a large portion of our economy. And the more they can do to stimulate that, the more they can do to make it easier for people to get into a home of their own, the better off we're all going to be. So I expect a lot more of those programs to be coming down the pipe. And we'll certainly talk about them on here. We'll have Todd on again. And when interesting stuff comes up, we'll have those conversations. But, you just got to keep your eyes open. And like we talked about, make sure that you're having the conversations with a professional like Todd and Makayla to find out exactly where you stand and what the options are. And there's really no harm in it. It doesn't cost you anything. Even if you have your credit pulled, that's not going to hurt your credit. Everyone thinks, oh, I don't want to do that. It's going to hurt my credit. Well, not so much so, unless you're getting your credit pulled every day for like 2 weeks or something, right?
Which you would not want to do. But yeah, I'm surprised at the affordable housing developments that have been popping up all over Portland. It seems like there's just more and more. And we had a buyer that was interested in looking at those. And I was also surprised at how easy the process was. You didn't have to fill out this application and wait, for the government to get back to you and let you know whether you qualify. You can actually make an offer, and then you just have to submit this form prior to closing. And all it requires is that, you make $140,000 or less per household. So pretty reasonable, in my opinion. It's a lot of opportunity out there.
Yeah.
It's a little known gem out there, and it's something that I think a lot more people could be taking advantage of.
Nice. Very nice. All right. Well, I couldn't end this episode without offering condolences to Makayla for what happened last weekend in Corvallis.
Rude.
Todd and I felt horribly for you. I really.
Hide that helmet back there, right
You
there.
know what? You should feel bad for me.
You had a good time. You were at the game with family and friends, and that's fantastic. And I'm so glad that you guys had fun.
Thanks. I did have fun, but we did lose, and it was a COVID super spreader event. Now I'm really paying for it.
Sorry to hear that.
Boy.
Todd,
well,
did Joe tell you that he changed one of my passwords to Makayla loves the ducks for last week?
Oh,
he's really been hitting me for 2 weeks now.
Very nice. Very nice.
Subtle jabs here and there go a long way. And it's all done with love, Makayla. You know that.
It's all done.
Whatever.
Right.
All right, guys. Well, hey, thank you, Todd, for taking the time. We always appreciate your expertise and your insights. As always, Makayla, good seeing you. I wish we were in studio together here, but all the best to you and your husband, and a quick recovery. So, all right, guys, that's all we have for today. Thank you so much, everyone, for joining. Have a great day. Take care.
Thank you. Bye.
Thanks for joining us today. If you're interested in finding out more about Joe, myself, or the Live Portland team, you can go to liveportland.com. Thanks for giving us a listen, and see you next time on the Off the Record podcast.